What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AFRM for Affirm Holdings. On the left-hand side, we're looking at the daily time frame, and on the right-hand side, we have the 30-minute intraday time frame. First things first, this will be more of an update since we have covered it recently, and the elephant in the room is, of course, if we turn on the extended hours session, you can clearly see a massive gap up underway based on some news that they will be partnering with Amazon for some sort of pay now or pay or buy now, pay later type of deal. Regardless, if we assume that we're opening on the gap up with an overnight high around 103 and the opening print somewhere around 92, we can employ some rules for a gap up framework. Remember, a lot can happen between now and 9:30, but these are the levels we'll use. The framework remains the same regardless of where the numbers end up being by the time the open rolls around. So for now, again, this is a very sizable gap up, but if we open here and fail to take out the overnight high on the opening drive, trade back down through the open, we're looking for a short to start to fill the gap. Now, I said start to fill the gap because of the magnitude here, it's going to be something where I wouldn't expect it to fill all in one day. Maybe it takes two, maybe we see a partial gap fill, then a reversal. So what is the area that you first need to be watching out for? Well, I would argue we always kind of want to be on the lookout for the 50% retracement of the gap. So if we go from the high of Friday up to the potential open of Monday, somewhere in here around that 92 whole dollar, the 50% retracement would be around $80.76. But if we clean this up, you can clearly see that this area of prior structure is in the way, just below around 80. So I would just use 80 as the potential first target here if we get a gap and trap, meaning we move lower off the open and start to fill this large empty space underneath. After that, obviously, all of this resistance from in the past is very close as well to the high of Friday, so the gap ultimately fills down there towards $70. That's the bear case scenario here where we get a gap and trap. Remember, open here, fail to take out the overnight high wherever it tends to be, fail to trade back down through the open. That's going to be the move to open the door short, essentially, into 80 as a first target, 70 as a second target. To the upside, we have to at least consider that we could also get a gap and go, meaning that if we open here, put in some sort of bullish pattern that consolidates just below the overnight high, looking for the breakout up and over 103 to take us into the next major area of daily resistance. And if we just scrunch up the chart, there's really not a whole lot of structure that was put in place here. I would argue you're looking at 120 and probably just some whole and half dollars as we get there. Just use a trailing stop high, right? If we get the long signal to go long on the gap and go, so over the overnight high, you're trailing your stop up higher. Again, I would look at 110 first as a major area of resistance, sort of reevaluate when we get there. Are the bulls truly strong? Are they starting to weaken a bit? Should I trim the position? So on and so forth. Trail the stop higher. 120 would be the next major area. And obviously, I really don't think it gets here, but this 137 is next up as structural resistance overhead. So those are my thoughts here. It's all going to hinge upon what happens at 9:30. Do we get the gap and trap, or do we get the gap and go on the positive news that they are, partnering here with Amazon? So if you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.